What is going on, my friends? It's great to see you guys. My name is Ryan Williams, and I have a question for you. Dividend stocks or real estate? Which one's better? Honestly, it's a tough question to answer, but in this video, we are gonna give it our best shot. That's right, my friends. Today, we are gonna be covering some of the similarities between investing in dividend stocks and real estate, of which there are a few, and we're also gonna be talking about some of the pros and cons to each. Additionally, just a quick side note, it is 100% possible to do both at the same time, just so you guys know, but we're gonna talk more about that later in the video, so be sure to stick around for that. And before we get rocking and rolling, if you guys love dividend stocks and you love real estate, go ahead and give this video 2 big thumbs up. And while you're at it, you might as well just mosey on over to that subscribe button for me and click that as well so you can stay up to date on all future videos. At this point, guys, I'm putting out videos twice a week, every single Wednesday and every Sunday, so there's a lot of great investing content coming your way. Anyway, thank you guys so much for doing that. I really appreciate it. And now, without further ado, let's get into it. All right, guys, so to kick things off, let's talk about some of the similarities between investing in dividend stocks, or actually just stocks in general, and real estate. So I actually think that there's a lot of symmetry between the two, and we can even take it one step further. I think investing in dividend stocks is actually pretty symmetrical to investing in rental properties, and I think the same is true between growth stocks and like fixing and flipping a house, and I'll explain a little bit. So with dividend stocks and real estate, you are investing for the cash flow. You are purchasing these assets, whether it's a house, whether it's a dividend stock, you are purchasing that asset to generate cash flowing income. Now, comparing growth stocks to like fixing and flipping houses, for example, you are buying that asset, whether it's that growth stock like Tesla, or you're buying a property that you're going to renovate, you are buying that asset with the intent of selling it at a higher price sometime in the future. The same might not necessarily be true with rental real estate or dividend stocks. You can hold those forever, but with growth stocks and with fixing and flipping properties, you are buying it with the intent to sell it at a higher price than what you bought it for. So that's kind of the symmetry that I see between investing in these two types of assets, which really may not be here or there. It's just an interesting connection that I was thinking about, and so I wanted to share that since we were talking about this today. And for the rest of this video, guys, we are just gonna be comparing dividend stocks to rental real estate. We're not gonna mess with the growth stocks or the fixing and flipping for this video. I mean, you guys know me, I'm a dividend stock investor. So moving on, let's talk about some of the pros and cons to investing in each of these types of assets. So starting with dividend stocks, one of the pros to investing in dividend stocks is there is a very low cost to entry. So you can start investing into dividend stocks with like as little as $5 or even $1 probably on some platforms, but it's very easy to get some skin in the game. You don't have to save up thousands of dollars to provide a down payment. You just set up a brokerage account, invest a few bucks, and you can get rocking and rolling and get your feet wet. One of the other pros to investing in dividend stocks is that it's extremely liquid. And for those of you who have not heard that term or are not familiar with liquidity, it's essentially how easy it is to buy and sell. So obviously with dividend stocks, all you need to do to buy or sell a dividend stock is just push a few buttons and the transaction's done. There's nothing more to it than that. It's extremely easy to get into, and it's extremely easy to get out of if for whatever reason you needed the money that you have invested. The third benefit to investing in dividend stocks is that it's very easy to generate cash flow from dividend stocks, guys, because literally all you need to do to generate passive income from this type of asset is just buy it and hold it. There's really nothing more to it than that. You can collect passive income in your sleep without having to lift a finger, and you can get like usually like a 2 to 5% return on your investment, or a 2 to 5% yield if we're just talking dividend yields. The fourth benefit to dividend stocks, and this is also true with growth stocks, with real estate, any sort of real estate, is that it appreciates over time. So with dividend stocks, not only are you generating passive income in the form of dividends, but typically if you're investing in the right companies, the price of your shares is going up over time as well. So not only are you generating passive income, but your shares are becoming more valuable the longer that you hold on to them. And the last benefit to investing in dividend stocks that I want to talk about today is that your income grows over time. So every single year, if you're investing in the right type of dividend stocks, they are increasing the amount of dividends that they're paying out to their shareholders. These are the types of companies you want to look at. And there are certain companies like Coca-Cola or Procter & Gamble or Pepsi, who have increased their dividend payments year over year over year for, in some cases, 40 years, in some cases 50. Procter & Gamble has increased their dividends for the last 64 consecutive years. And so with that said, I mean, the longer that you hold on to them, the more money that you're going to be paid in dividends. And now that we've talked about some of the pros to investing in this type of asset, let's talk about some of the downside, because there is pros and cons to everything, guys. I'm not gonna lie. Even though I love dividend stocks, I may be a little bit biased towards them. There are some downsides to them. And the very first one that I want to talk about is kind of a pro, but it's also kind of a con depending how you look at it. So I mentioned earlier that they're very easy to invest in. All you need to do is just invest some money and pick which stocks you want to buy. But that can also be a negative, guys, because it's so easy to purchase these stocks, it creates the risk that people are going to be buying into companies or buying into stocks that they really don't know much about. So it really eliminates the need to do any sort of research into what you're buying. You can just watch a YouTube video like mine, hear me say Pepsi or Coca-Cola or Procter & Gamble, and you can just go buy it. The point I'm trying to make here is it's easy to invest in this type of asset without having to do much research. And I'll level with you guys, like researching dividend stocks, it's foreign to many, many people. And even for those who know how to do it, sometimes it can seem tedious. Sometimes it can seem a little bit dull. I mean, I'm not gonna lie. It's not the most, it doesn't keep you on the edge of your seat. Let me just say that. But it is an important part to investing in this type of asset, as with any asset. This one just so happens to be easy to avoid doing that, which in my opinion is a negative. The next downside to investing in dividend stocks is that it can be tax efficient. So I won't go too much into this, but with dividend stocks, guys, there are what are called qualified dividends, and there's also non-qualified dividends or ordinary dividends. And qualified dividends are taxed at the capital gains rate, and these ordinary dividends are taxed as ordinary income, which for some people can be as high as like 37%. But then on the other hand, if you're just investing into these qualified dividends, the highest that you'll pay in taxes, I believe, is 20%, depending on your tax bracket. And just a quick side note, if you invest in dividend stocks, you can actually put yourself in a much more favorable tax position by putting your stocks in a type of account called a Roth IRA. You guys have probably heard of these, especially if you have some experience investing. But essentially with these Roth IRAs, you can withdraw your dividend income, withdraw your money tax-free after the age of 59 and a half. The last negative thing I'll say about dividend stocks in this video today, guys, is that you always do run the risk of something happening to that income. So just because a company pays a dividend doesn't mean it's gonna last forever. There's many companies who end up cutting their dividends or don't increase them. Anything can happen, especially when we're dealing with an asset that is so heavily affected by economic and geopolitical factors. Some of these dividend stock companies have some volatility to them, and it's not for everyone. That's why I always try and stress the importance of investing in companies that are strong, reliable companies like the Procter & Gambles, like the Pepsis, companies that you know that have been around for a long time and have a good proven track record. All right, guys, now moving on, let's talk about real estate a little bit, and let's start with talking about some of the pros to investing in real estate. The first one I want to discuss is that it's tangible. Okay, when you buy a rental property, you can physically go to that property, you can see it, you can step inside of it, you can customize it, change the roof, paint the exterior, put in different things on the inside, change the lighting. You can do all this stuff to it. You can physically see it, physically stand inside of it. And I think for a lot of investors, it just is easier to wrap your head around the idea of investing into something that you can actually touch, something you can actually see, something that you actually can verify that it's there. I think the concept is a little bit less foreign to a lot of investors. Moving on, the next pro to investing in real estate, buying a rental property, is that just like dividend stocks, the cash flow is pretty easy. You have to do some legwork up front when it comes to obviously researching and going through the escrow process in buying the house, but once you have it, once you've closed, it's yours. You've got a tenant in there, you can just sit back and collect that rent for the most part. And this is especially true if you hire a property management company, which some do, some don't. But it can be a very easy way to generate passive income depending on how you've set it up. And I mentioned earlier that dividend stocks, you can maybe expect somewhere typically like a 2 to 5% yield if we're talking dividend yields. But with rental properties, you can actually get a lot better returns. It's not at all uncommon to get like an 8 to 10 to 12% cash on cash return from your rental property. Now moving on, similar to investing in dividend stocks, with real estate, there are ways that you can increase your income year over year. The most common way that people do this is simply just by raising the rent that they charge their tenants. It's not always the best strategy to do, but it is possible to do it. Like theoretically, if you wanted to, let's say you have a tenant with a 1-year lease. After every single 1-year lease, or after the life of any lease, you can always raise the rent on the tenant, and then it's up to them to decide whether or not they want to stay in. Now, as I said, that's not always the most advisable strategy. It differs from landlord to landlord how they want to handle it, but it is possible to increase your income on the rental properties that you own. That is the point that I'm trying to make. All right, now moving on. One of the bigger benefits, I'd say, to investing in real estate is it is pretty tax efficient. You can actually deduct a lot of the expenses that you put into your rental property, like your mortgage interest, your insurance, any sort of maintenance or repairs, your property management fees. There are just tons of ways to reduce the taxable income that you receive from your rental properties, which is gonna save you come tax time. And by no means am I an expert on this tax stuff, guys, especially when it comes to real estate, but I do think it deserves a little bit more research on anyone's part who is interested in investing in it, because there are some pretty nice tax benefits to investing in real estate. All right, now moving on. One of the other big pros, the great benefits to investing in real estate, is that you can substantially increase your net worth by buying rental properties. So as you guys know, if you guys have ever looked for a home, they're typically hundreds of thousands of dollars, okay? And as an example, let's say you're looking at a home that's $300,000. Well, these days, guys, it's not uncommon at all to only have to put down like a 3 to 5% down payment. And if you're putting down a 5% down payment on a $300,000 home, that's only what, $15,000? So to have control of a $300,000 asset, you'll only need to put down $15,000 and then whatever the closing costs are, which is probably a few more thousand. So let's round up and say 20 grand. To control a $300,000 asset, increase your net worth by $300,000, you only need to put down like 20 grand, which is less than 10% of the price of that asset. And the last benefit that I want to talk about, this one might be a little bit obvious, but home values also appreciate, guys. Like the price of your stocks, like your dividend stocks, the value of homes typically appreciate over time as well. And if you're buying rental properties, you're planning to own it for, mortgages are 30 years, so own a home for 30 years. You got to imagine that across that 30 years, the home is going to be worth more than what you bought it for. And the cool thing about that, guys, is like we mentioned a moment ago, to buy a $300,000 home, you only have to put down like 20 grand. Well, an 8% gain on a $300,000 asset is going to be a lot greater than an 8% gain if you were to invest that same 20 grand into dividend stocks. All right, guys, now moving on, let's talk about some of the downsides to investing in real estate. And we've already touched on this first one a little bit, but it's a little bit more expensive to get some skin in the game if you're investing in rental properties. If you're going to be buying a house, it's going to take a lot more capital to get into it than it would be if you were just investing in dividend stocks. So like we mentioned earlier, to invest in dividend stocks, you maybe, put down like $5, you can buy a fraction of a share. But it's going to require a minimum of thousands of dollars. How many thousands? It differs, but thousands nonetheless to invest in your first rental property. Secondly, as opposed to investing in stocks, real estate is just not as liquid. Whether you're buying or selling a home, there is a process to it. You can't just push a few buttons and purchase a house. You have to go through a lot of steps to do it. And these steps can include things like not only looking for the home, which can take a substantial amount of time, but crunching the numbers, making sure it pencils, going through the escrow process, which can take weeks, sometimes months, fixing up the house if necessary, which can take an even longer amount of time. So there's a lot to do. There's a lot that goes into purchasing these homes and even selling these homes than, like I said, just pushing a few buttons. It's a little bit harder to buy and sell. And the last downside to real estate that I want to talk about, guys, this one actually is especially true if you don't have a property manager, is that you have to deal with just a lot of issues, okay? You have to deal with maintenance issues. You have to do rehab on the home. Sometimes there's issues with tenants, maybe not getting along, or with the neighbors or something like that. There's just a lot of things that can go wrong at the house. And not everyone wants to deal with that. Some people just want to buy the asset. They just don't want to do anything with it. And even if you have a property manager too, like you're still involved as the owner of the home. You still have to make decisions on certain things. But some people, just might not want to deal with any of that. All right, guys, now with all this said, it really begs the question, and this is the point of this whole video. Which one is better? Is it better to invest in dividend stocks, or is it better to invest in real estate? And I'll tell you what, there are going to be tons of people out there, probably some in the comment section below, who are going to say definitively it's better to invest in one type of asset over the other. But I don't want this to sound like a cop-out, guys, but it really just depends. In my opinion, because there's so much more that goes into purchasing a rental property, going through the whole escrow process, I think that can be a lot more intimidating, especially to newer investors who have no experience with any sort of investing. It's also a lot more expensive to get into. Like as we compared earlier, it's the difference between like $5 and, you know, multiple thousands of dollars. But overall, guys, I think it's completely circumstantial and preferential. I think it depends what you're looking for. For example, if you are investing with the hopes of replacing your W-2 income, getting out of your 9-to-5, achieving financial freedom, I personally think that's going to be much quicker achieved by investing in real estate and renting it out and, you know, building a portfolio of rental properties, just because typically the return is higher. Like I said earlier, you can generate like 8, 10, 12% cash on cash returns by investing in rental properties, and that's going to enable you to replace your W-2 income a lot quicker than it would if you were investing in dividend stocks. Realistically, guys, it's not uncommon to see people buy like 3, 4, 5, 6 different rental properties and then be able to quit their job and invest full time. And there are so many ways to get creative with it and figure out how to buy a rental property every single year, especially if you only have to put down like 3 to 5% every year. Because if you can just save up that down payment for each property, you know, 5%, 3%, whatever it is, and then make sure that it pencils, make sure you're taking in more than you're paying on the property, then you're good. But on the other hand, if you're someone who maybe doesn't necessarily want to quit their 9-to-5 and, you know, is gonna do the whole retire at 65 thing, then you might be better off just investing in dividend stocks. Even if you're someone who just generally wants to take a more hands-off approach to investing, you might be more inclined to go that route over real estate. In my opinion, investing in dividend stocks will be simpler. You're not gonna have to spend as much time managing it. There are ways to set it up so you don't have to spend much time on it or give it much thought. In fact, there are ways that you can set it up that it's completely affordable for you and you don't even know it's there. You kind of set it and forget it. And if you are someone who wants to be as hands-off as possible, that's exactly how you want it to be. The good thing about this dilemma, guys, is that it is completely possible to do both at the same time, as we covered in the intro of this video. There's really nothing out there that says you can only do one or the other. Obviously, you could buy dividend stocks and also have rental properties. In fact, many people, including myself, diversify their investment portfolios in this way and dip their toes into both dividend stocks and real estate. Which, by the way, like if you guys are familiar at all with my channel, you'll know that we strictly talk about dividend stocks, but I do have one rental property. And if you guys would at all be interested in hearing more about that, just leave me a comment below, let me know. If there's enough demand for that, I will 100% make a video talking more about the real estate side of my investment. Anyway, another way to do both at the same time is actually very simple, and it's by investing in what are called real estate investment trusts. You might know them as REITs, R-E-I-T-S. You guys already might be familiar with REITs. I know a lot of dividend investors are and have them in their portfolio, but essentially they're companies that own income generating real estate that you can purchase on the stock market like any other normal company. I personally own a couple REITs in my portfolio. In fact, the biggest holding in my portfolio is a REIT, Realty Income, ticker symbol O, and it makes up almost 10% of my portfolio. I have another one in my portfolio, WP Carry, ticker symbol WPC. But in general, guys, these are very good and easy ways to invest in dividend stocks and in real estate at the same time, because essentially you're owning a real estate investment company. The good thing too about investing in REITs is they typically have higher dividend yields than other stocks. Like for example, on my computer, I have it pulled up. Realty Income has a 4.08% dividend yield, and WP Carry has a 5.31% dividend yield. So that's pretty high, especially for a dividend stock. And in my opinion, it is not a bad way to go if you want to invest in real estate, but don't want to take the plunge into buying an actual physical property just yet. All right, guys, and that pretty much wraps it up for today's video. I hope you guys got some good information out of this and enjoyed learning a little bit about dividend stocks and about real estate. I think the important thing here, guys, whether it's with dividend stocks, whether it's with real estate or growth stocks or whatever it is, the important thing is that you're investing at all, okay? That you're getting some sort of skin in the game and doing something for your future, because one way or another, that's really the whole point of this, is trying to create a better future for yourself. And in whatever capacity fits for you, investing is important. And just for the fact that you're even trying to take an interest in this stuff and watching these videos, hats off to you guys. I think that puts you just miles ahead of a lot of other people out there who probably don't even have this stuff on their radar. But it's so important, and actually once you get rocking and rolling with it, it can actually be pretty fun. Believe it or not, guys, I know growing up, none of us ever thought that crunching numbers and analyzing deals would it all be interesting, but it really is. Anyway, guys, if you are still with me here at the end of this video, you're a rock star. I don't know anyone who can listen to me talk this long, but if you are, thank you. And If you haven't done so already, please don't forget to like this video before you click off to the next one. And also, if you enjoyed watching this and would love to stick around for more videos, please hit that subscribe button as well. At this point, I am putting out videos twice a week. I upload every Wednesday and every Sunday. So there is a lot of good, primarily dividend stock content guaranteed to be coming your way, okay? And like I said earlier, if you guys would at all be interested in hearing me talk about the one rental property I have, please leave me a comment below and let me know. If there's enough demand, I will absolutely make a video on it. I would love to tell you guys about that. But with that said, I will now get out of your guys' hair. Thank you once again so much for watching. I really appreciate it. Hope you guys have a good day, and I will see you in the next one.